How can we synthesize all of this information and data?
Just show you there is explosive growth and there's huge opportunity if you do some homework.
Every day we're talking to new companies who have an exciting play, so much opportunity in this market. There's so much to get pumped up and supercharged about.
That's the next step. We want you to take that step. Come and join us. Hit subscribe and join us over here at Supercharged Stock. Get all charged up. Good morning. Happy Friday. We're here in October already, October 1. And we're here joined with Curt Marvis, who's the CEO and co-founder of QYou Media. Really looking forward to catching up with you here. And I mean, there's so much has happened since we chatted last. Yeah. Never mind the great conference call you had yesterday, an update. How's your Friday?
Great. Good to see you guys.
Great to see you.
So Curt, listen, maybe we'll jump right into it here. Let's start with the big ticket item from yesterday's update. You guys raised the revenue guidance. What does that look like? How are you guys feel about that? What was the tax strategy here?
Yeah, I mean, look, obviously we're thrilled with the revenue growth that's happened in 2021. I mean, this has been nothing less than a transformative year for the company. My kind of joke is we'll be an overnight success in 10 years. Well, we're about 7 years into it right now. Yeah. So it's, you know, my billion-dollar dream may come true at that point. Look, we have basically three kind of key business units, if you will. Two of them are in India. One is what we call our channels business, which is the business of running literally a television channel in India, which at the moment is the fastest growing television channel in the entire country of India. So that's quite amazing. It's very youth oriented. It's featuring all content that comes from digital sources, as you guys know. And digital sources means what we refer to as social video, which is stuff from YouTube, Instagram, Snapchat, etc. Not TikTok in India, because TikTok is banned in India, but there are TikTok sort of imitators there now. And so that's one big business that's growing really rapidly. We've been adding a lot of blue chip advertisers, everybody from Amazon and Facebook through Procter & Gamble and Unilever. So, you know, all the big boys. So that business is growing super fast and exceeding expectations at this point. We've got another business in India, which is called Chatterbox, which is our influencer marketing company that works with many of the same brands that we feature on the TV channel to do literally influencer marketing campaigns and using influencers to promote those products. So that's growing really rapidly because that whole business is taking off, not just in India, but everywhere. And then the third business is the QYou USA influencer marketing business, which is similar to the Chatterbox business. And that one's growing as well because the influencer marketing business in the US is taking off. So the net of it was we put out guidance of 3.1 to 3.8 million in revenue not that long ago, 3.5, 4 months ago, for the quarter that just ended yesterday on September 30th. Well, you know, there's a little bit of wiggle room there. We said 4.7 to 4.8 is the new number because sometimes there's revenue recognition, last minute things, et cetera. But the bottom line is we've jumped over what we originally put out for the quarter that starts today. So the quarter that starts today, our guidance was 4.1 to 4.5 million. Well, we're reporting 4.7 to 4.8 for the quarter that just ended. So we're literally more than a full quarter ahead of the guidance that we had previously given. And it's a result of all three business units firing on all cylinders. That's what it boils down to.
Yeah, and that's what a lot of people have been waiting for. Certainly, we've been waiting for us to see what's the revenue look like how's it working. You know, we've seen all the work over the summer of all the shows. You know, the GRP rating is constantly high, and to see then, okay, so the guidance is going up on the steep curve as well. I think that's what people were waiting for, and that's what they're looking at is this model going to work? And right now you're showing, yeah, it's working, you know, very fast, very quickly with strong growth over even what you're even hoping, you know, with the guidance before.
Well, yesterday I talked about the macro themes that we believe are the key to our success, and that we're just in the very beginning of these things really coming to fruition in terms of driving huge numbers. And that's the theme of social video. I mean, we all know, I love your TikTok. You guys are on TikTok, for God's sakes. I mean, everybody's on TikTok. So TikTok just announced they have 1 billion monthly average users. It's nuts. And you're a perfect example of how TikTok is becoming a platform, not just for people doing goofy shit and dancing and whatever. It's for business to be done. It's for transactions to take place. It's for information to be provided. And that's happened on all these platforms. It happened a long time ago on platforms like YouTube that you're on. It's on Instagram. It's on Snap. It's on TikTok. It's Facebook. It's everywhere. And that's undeniable. And India is a hotbed for all of that stuff. Why? Because there's 650 million people 25 years of age or younger. I mean, it's staggering when you think about that. So 650 million people that are going to be going from, childhood through their, early 30s, 40s over the next decade. Well, what's that going to do? That's going to provide massive momentum and growth around all of these new platforms. And additionally, you've got the creator economy, what we call the creator economy, which embeds itself really in social commerce. I didn't know before we did our call, obviously yesterday, that Meesho, the leading social commerce company right now, startup really is what it is in India, 6 months ago. I was going to talk about Meesho on the presentation yesterday to talk about how they had raised $300 million at a $2.1 billion valuation 5-6 months ago. Okay. Yeah. That's what I was going to talk about yesterday. In the morning, the news was they raised an additional $570 million, and they now have a $4.9 billion valuation. In 6 months, they went from 2.1 billion to 4.9 billion. Okay. Yeah. That's why is that? It's because the macroeconomic themes around social commerce, around social video, around influencer marketing in India are so profound. That's why. It's that simple. And we haven't even begun to really tap into that yet. That's a 2022 agenda that we're working on as we speak, because we want to make sure that when we enter the market, we're entering in a way that leverages what's unique about our business that some of these other people don't have.
Yeah, I'll reiterate that as far as areas that have been untapped in the world. And, it used to be the natural progression was let's look at China. We'll look at the scene. It's like, I think people are enough to go hands off for the time being. India is such a huge market where they're hungry and starved for content, where it's like, if they can see like a flash of, oh, here's a new detective show, but it's Indian based. It's like, it's going to add a level of excitement. And also, within that, even if I look at TikTok and you see someone, even if it is kind of just a dance routine or a flaky thing, you go, oh, those are kind of cool shoes. Like, you're going to see other stuff and go, oh, that's a cool shirt. I wonder where I could get that. All of this stuff works. It works very well, and it captivates our imagination, our mind. And sometimes, like with us, it's sometimes people just see and go, oh, they seem likable. Maybe I'll go check out their channel.
No, totally. It's a great it's a marketing platform at the end of the day. At the end of the day, it's a marketing platform. And the thing that's changing is it's a direct conduit to your audience. So, you guys are influencers. That's what you are influencers. You might not think of yourselves that way, but in my world, you're influencing a community that follows you about what their opinions may or may not be about things that they're interested in. That's what all this is. It doesn't matter whether you guys were doing a makeup and hair, how to style your makeup and hair show, or whether it was about how to, sew clothing. These platforms have become direct formats for communication between communities and audiences that are interested in what they're doing. And now that's the next iteration. We'll look back on this interview 10 years from now and we'll laugh that we were even talking about it. The next iteration is transactional. It's going to become transactional. It's not just talking about it or saying it or showing it. It's going to be actually buying it. And as that happens, and look, COVID, was a disaster for the planet Earth, but COVID changed a lot of stuff, not just Zoom, meetings and people going out of office buildings and work from home and all of that. It changed the interaction that people were having at home with these platforms, and it will be looked back on as one of the elements that started this transactional business off of all of them.
And I like it in a weird way from my generation when you'd have like on demand. And you're like, ooh, I can get this on demand. It's like you can get this on a level of on demand in the future where it's like on your phone, you see something and you're like, oh, I need to see that.
Look, I mean, 3 years
so
ago,
fast.
3 years ago, I would have looked at, Amazon and in a certain, like if I need something big or I'm going to do something that's of substance, I now use Amazon. I feel badly about it sometimes, actually. I need 2 9-volt batteries. This morning, I ordered them off Amazon because they get delivered here this afternoon.
Yeah.
Why would I get in my car, drive to the store to buy 2 9-volt batteries when I can just go boom, 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 click, 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 and in literally 30 seconds, go Amazon Prime, boom, it's getting delivered in this afternoon.
Yeah.
And the thing is that the COVID drove that mentality even further.
Yes,
for sure. And so that's one of the big growth areas that we see ourselves leveraging in India in a huge way as we move forward.
I think it's funny too, because people, and in my space, when I talk to other people that would be doing Zoom, they're like, we've become so efficient. They're like, which is good because you can get a lot done, but then you're like, I'm completely exhausted now. Because before it'd be like, hey, I'll go meet you for a coffee. I've got a meeting with a family office or a fund. Well, you got to travel there. You have a coffee. You kind of joke around for a bit. All of a sudden, an hour is gone. You head back home. If it's Zoom, it's like it's on. You talk for like 20 minutes. Boom, next meeting.
Totally.
So like,
we were talking about it just the other day. In the influencer business here, we have a meeting with Disney. 5 of us would get in our cars. We'd drive over the hill. We'd get there. We'd park. We'd get in. We'd wait in the lobby. Finally, everyone would show up in the conference room. We'd get in our cars, go back. It takes 3 hours.
Yes.
Now you have a 1-hour meeting in 1 hour.
Yeah.
I mean, that's a big time difference. That's a huge time difference. That's 1/3 of the amount of time that was previously spent. I mean, to your point, it can be exhausting as well because you're never really out of the office, right?
Yes, the efficiency is like, it's really efficient.
Yeah.
And it's amazing because even I say with my generation, where it's like, we knew we could do this, say even in the mid 2000s, where it's like, we should have these online conferences. You should be doing this stuff. You could save a lot of money on travel and this and that, but it wasn't really taking hold. Whereas now it's firmly taken hold. People have done it long enough where they're like, can I work from home now? Like, can I do this online? Because I'm so comfortable and I have saved time, and maybe I'm applying that time to, I've got more time with my kids. I've got more time with my family, whatever. But this new model is shaking up things so well because it's so efficient. You can reach so many people and it's so effective. And it's now finally fully adopted. And that's a big thing with anything technology. Is it adopted? And it has.
Yeah, totally. And look, the thing is that the interaction, what we're doing right now, talking to each other live, that's what drives the commerce transaction too. I mean, a lot of purchase intent, happens right then. And that's where Amazon with one click became so powerful because it was frictionless. And so frictionless transactional capabilities, which is where this is all headed, that's extraordinarily powerful where there's no friction. It's like, if I want to buy a new t-shirt, do I really want to get in the car and go to the store today, and it's Sunday and football's on and et cetera, et cetera. Now it's like my phone, boom, boom, boom. I can do it while I'm watching the game, sitting down. I don't have to go anywhere. And that concept for this youth generation, that's why this young 650 million people, 25 or younger, smartphones entering in India, broadband penetration starting to happen, bandwidth super cheap there. All this is going to drive that in a massive way in that country.
And what's also really cool with you guys, and Jess here jumped in line and asked, it was kind of making it was recognizing the fact that you've got like Bluechip advertisers. This isn't just, I don't know who this is. It's a brand in India, and someone in North America might go, I don't know who that is. This is major. I mean, it's Pepsi. It's things like that. It gets major Bluechip advertisers they're using you. So it's not a matter of does the model work? Do we need to show that it works? It's like, yes, it does. They're paying. They're interested. They see the growth, and that's a huge a huge, kind of hats off to them recognizing the growth potential.
Well, yeah, I told people yesterday on the call, we were putting out press releases when we signed Procter and Gamble and Unilever and Pepsi and Amazon. We've since added Facebook and Coca-Cola, and I didn't even put out any news about it. It's just kind of like, okay, that's what I would even just, I'm talking about only 3 months ago, I would have put out a press release that Coca-Cola is a new advertiser on the queue. I didn't even do that because it's sort of like, okay, well, that's what we expect to happen now.
Yes.
No.
And I think that's great because it lets you to focus on all these divisions that are doing things, knowing that, okay, the model's working, we're getting the revenue, and it's just a matter of growth. And as they're growing, I mean, that's how advertisers work. They go, your GRP's up, your shows are getting traction, people are watching. That's the model. You guys, your entire team, and just to kind of take a step back to remind people, your team understands this model. I mean, you've got the creme de la creme involved that completely understand how to do this. And you're in a market that's just ginormous.
Yeah. I mean, look, we're always talking about it. It's, you've got to have especially in your public company, you got to have the discipline of growing the businesses that are working. And that's what we constantly have to focus our efforts on, is to say, we've only been really at this level for 6 months. This is still very early. Let's continue to grow it. Let's build, let's strengthen it on all these 3 different divisions of the business. And at the same time, you've always got to be looking for the growth opportunities. And so, we're constantly, I mean, that's what we do. We're solidifying, building, and growing the core asset. And we're also looking for the things that can lead to major growth going forward. That's really the balancing act that we're always in. And, someone asked me yesterday about, are we, cash flow positive, et cetera. We could be cash flow break even in the month of October if we were a private company and we were just going along and pulling dollars out, et cetera. That's not what we're doing. This is the beginning. We didn't raise capital to put it in an interest-bearing savings account. Why would we do that? We raised capital to look for really good opportunities, like when we acquired Chatterbox, and there are more that we're looking at right now. We looked at it to invest in things where it can be accretive to the business and really put us in a faster trajectory to where we want to go. And that's what we're doing.
And that can make it easier to plot that plan ahead. And I'm going to kind of shift and ask you about that plan ahead and what's kind of next on the agenda. I know you guys have a new channel in the works that you're kind of keeping under wraps. You haven't quite given away everything on that, but what is kind of the next, 5-6 months for QYou look like?
Well, yeah, you just mentioned the first thing, which is the idea around Q India, if you will, was never to be a channel. It was to build a new next-gen media company. And a next-gen media company means that television's we call it the Trojan horse. It's kind of how we've entered the castle. But ultimately, digital, mobile, all these things are incredibly important to us. We're spending a lot of time right now looking at the growth that's projected for what's called FAST, which is free ad-supported television. That's connected TVs that are connected into the internet. I don't know about Andrew, but Austin, you're so young, you probably don't have a Rogers or Shaw connection. You just use your connected TV, and do it that way. Everybody who's 30 years or younger is doing that. So, so the bottom line is that the channels business is, and the reason we haven't talked about, other than saying we're launching one to let people know it's coming, is because India is an extremely competitive market. We've got a certain thing that we're doing with this, and we don't want to tip our hand, at this moment in terms of exactly what that's going to be. But what investors can know and expect is that channels are going to keep coming from us. We're going to launch more and more. We're not just going to be one channel. We're going to be multiple channels. Who knows? Maybe ultimately, 10 or a dozen channels over time that are feeding different, sort of audiences, different opportunities for ad revenues, et cetera. And that always are going to leverage the existing infrastructure and people that we've got in the company. I don't have to hire another CEO in India to launch another channel. That's under their purview. So there are economies of scale that occur in that. The other thing is the Chatterbox business and the influencer business. Huge part of what's happening there is directed into the arena of social commerce. So you can absolutely expect that you will start to see things that we're doing that are more transactionally oriented, that are more gamified, that are offering rewards or other incentives for people to engage with the content. So we're well aware that the one way, sort of lean back modality of television is going to change very, very rapidly, including, by the way, on connected TVs. Because remember, if you're on a Roku thing or whatever, a lot of that stuff you can interact with the connected TV because you're online. You're not in a one-way signal coming from a satellite or a cable connection.
Right.
So all of these different things in terms of what's happening around the world are things that we're going to be pursuing specifically in India. And digital and sort of the next stage of television, India's still relatively behind. There's a huge part of India, rural India, tier 2 and tier 3 India, that's not as far along as the US, Canada, or Western Europe. It's catching up. So we're going to ride that wave, and we think we're super well positioned to literally ride that wave.
And speaking to the competition side of things, maybe you can kind of remind people too the importance of that strategic partnership investment with Times of India and Brand Capital.
Yeah. So Brand Capital, for those who don't know, is the investment arm of Times of India. Times of India is the largest media company in India and one of the largest media companies in the world. They own hundreds of newspapers. They own the equivalent of Wall Street Journal, New York Times, and the LA Times, just among 90 other newspapers and magazines. They own outdoor billboards. They own television channels. They own, I think, 70 or 80 plus radio stations. So they're a huge media conglomerate in India. Their arm, Brand Capital, was set up so that they could partner and invest in companies in India and literally help them build their brand, which is kind of the phase that we're in right now. So Times of India Group invested. We just closed about 6 weeks ago a $2 million US investment at 32 cents a share. They have the opportunity to invest up to an additional $8 million over the next 3 years. With ratchets obviously going up based on share price. It's not all at 32 cents. Yeah. And so we've already started to leverage that. I mean, we ended up with an ad on the front page of the Times of India. Guess how that happened? They use their editorial power and editorial strength to be able to do that. And we're working in conjunction with their people in India to build our brand. Because at the end of the day, even if you look, as you guys know, I have a long past because I'm so old with MTV, the original MTV in the 80s and 90s. And it wasn't about MTV viewership necessarily or the channel. It was about the brand. It was about what MTV embodied as a brand. And that's where its real value and power came. We're on the same, moving in the same direction. It's not about just building Q channel or even Q channels. It's about building Q as a brand that's synonymous with the best of what's happening in the world of social video content in India. If we get there and we're moving in that direction, now we're talking about a company that could be worth literally billions of dollars, not hundreds of millions of dollars.
Yeah, and I think that can't be understated, is the fact that the team that you have that's done this as at HBO and whatnot, understanding that model and going, yeah, we think we could do this here in India, and they want it. And it's this huge young group that if they go, this is hip, slick, and cool. It looks awesome. It's cute. It fits well. Yeah, it's either the upside is shocking. It's huge.
Yeah, the scale there can be amazing. I mean, we have 100 million views of our content, or people watching every week in India. It's like crazy, right? 100 million. That's twice the population of Canada, I think. So, you get crazy numbers there. Monetization is lower, obviously, because incomes are lower, et cetera. But it's starting to catch up on all fronts. And look, the smartest investors, I said this yesterday, the smartest investors on the planet Earth, Google, Amazon, Netflix, Disney, Microsoft, these companies are pouring billions of dollars into India right now. Well, they're not doing it because they think that, for a crapshoot, they know that this country is going to be meaningful for them on a go forward basis. So we're a pure play really in that respect. And that's why we're so bullish on the fact that, as much as we've risen up in value over the last 6-9 months, we think that it's, we're still undervalued and people still don't realize how we're positioned in the market.
And I think that's we like so much, is that getting in ahead of, like we say, in ahead of the curve on things, is that you can see the vision and you have the management team and they've told you, here's our milestones, here's our plan. You then deliver it and then, meet, past those expectations. We want to reiterate to people is that that's what we look for. And does it mean today that the stock completely realizes it? No, we're in a weird, it's October. It's weird right now. So, but a year from now, 2 years from now, people will. I really think people will look back and go, "Oh God, wow, yeah, they were really onto something."
Yeah, no, totally. I mean, we are. So much is about timing. So much is about having the right people, and a lot of it, you got to be a little lucky too. That always helps as well. But in a weird way, our luck is that after a lot of missteps and turns and bad moves and other things, we had the collective vision. I will say that I started it and convinced everybody of it initially. They're like, India, what are you talking about? That everybody, once we did the research and looked at it and said, okay, this isn't like going to happen in a month, but if we stay at this and we keep grinding and we keep working it, this is a marketplace. People ask me all the time, are you going to go outside of India? I go, look, there's 1.4 billion people. We don't need to go outside of India right now.
Never need
we might 5 years from now, 10 years from now, who knows? But right now, success in India means a multi-billion-dollar valuation. And that's really that's all we think about. Let's go India, India, India. So that's why we're so focused on it.
And it's funny because I even have people here that'll be like, we're just focused on this portion of the Canadian market. You're like, okay,
right,
so 5% of 36 million. You're like, how about just a couple percent of 1.4 billion?
Yeah. Exactly.
So that is scalability. And once again, this isn't something complex that people have to understand. Like, it's not like we're talking about nuclear energy where someone goes, oh, I don't know about that. This is something that someone can look and go, I grew up. I know what MTV is. I know they don't need to understand the business, but they'll understand and get once they see the website, they see the shows, the influencer market, they'll go, oh my God, yeah, this can work.
Yeah, I mean, look, the companies that we are sort of pulling content from and dealing with, et cetera, Snap is worth $125 billion. People will tell you YouTube is worth, $500 billion. Facebook, I don't know what their market cap is, if they're $1 trillion or 600 billion or whatever it is. I mean, these companies command just ridiculous, insane valuations that are in this space because the value of these platforms is so profound. Well, guess what? We'll take a little, I'll take 1% of the $600 billion valuation, and we'll be real happy with that. Yeah, and that's how we look. I talk to people all the time in the world of computing and software and cloud-based technology. Yeah, there's Microsoft that has $1 trillion valuation, but there's hundreds of companies that have multi-billion-dollar valuations that are based around the world of cloud computing because it's so big, it's so vast, there's so many places you can play. We view it exactly the same way. I'm not sitting here telling anybody we're going to be $100 billion company 3 years from now. But when people say, I say $1 billion, like, really? You think so? I go, that we're just that's if we achieve being a small piece of what the overall pie is of this whole thing. It's not some crazy, insane view. So that's how we look at it. And that's where, look, of course, I'd love to be worth $100 billion, but that's, we'll talk about that. We'll talk about that, later. But we do believe that for us to talk about the kind of valuation that we can command and why we're undervalued today, it's for that reason. This is reality. It's not me making this up about what these companies are worth. You can go on your stock chart and look at them. It's insane.
Yep. And it is. It's easily to quantify. You're absolutely correct. And this platform and this entire strategy you have, the big thing people would have looked at, say 6 months ago, was, well, okay, are they going to hit the milestones? Will it work? And you've shown that, and the revenue's in. You've got better revenue coming. So I think people are going to really be paying attention now to go, wow, this thing. I need to pay a bit more attention to what's happening over here, and we're pleased to be involved. So we're
basically at a $20 million annual run rate right now, and that's going to increase dramatically in 2022, and it's just going to keep going like that. So it's exciting times for sure.
Well, Curt, we really appreciate you, spending the time with us here. I know you had a big, long talk yesterday, and I'm sure you had a million questions, and you're probably talked out. But this is exciting. This is stuff that we were looking for, certainly investors as well, to see this kind of guidance. And I'm sure there's so much happening behind the scenes now that will be going on for the next months ahead. And we're looking forward to see what gets rolled out here in the near future.
Well, I appreciate the support you guys have given us and the interest you have in our business, and appreciate you having me on the show. And I'm hopeful that I have at least one soundbite that can get me onto TikTok so I can show my teenage daughters that I'm TikTok famous now. So,
we'll get you on there for sure. That's
okay.
You betcha.
Beautiful. Thanks so much, Curt.
Thanks, guys. Thanks so much. Okay, we'll talk soon. Bye.